Warren Buffett is one of the most famous and successful investors in history. He is the chairman and CEO of Berkshire Hathaway, a holding company that owns dozens of businesses and invests in hundreds of others. As of September 2023, he had a net worth of $121 billion, making him the seventh richest person in the world. But how did he achieve such incredible wealth? What are his principles and strategies for investing? How does he decide which stocks to buy and which ones to avoid? These are some of the questions that many people ask, and fortunately, Buffett has been generous enough to share his wisdom with the public through his annual letters to shareholders, interviews, speeches, and books. Here are some of the key points that you need to know if you want to invest like Warren Buffett. First, you need to understand the difference between price and value. Price is what you pay for a stock, but value is what you get in return. Buffett follows the value investing philosophy of his mentor, Benjamin Graham, who taught him to look for stocks that are trading below their intrinsic value. Intrinsic value is the present value of all the future cash flows that a business can generate. Buffett says, price is what you pay. Value is what you get. Second, you need to do your homework and research the businesses that you are interested in. Buffett does not rely on market trends, analyst opinions, or media hype. He studies the financial statements, annual reports, and industry outlooks of the companies that he considers investing in. He also tries to understand their competitive advantages, growth prospects, and management quality. He says, risk comes from not knowing what you're doing. Third, you need to be patient and disciplined. Buffett does not chase after hot stocks or follow the crowd. He waits for the right opportunities to buy great businesses at bargain prices. He also holds on to his stocks for a long time, as long as they continue to perform well and meet his expectations. He says, the stock market is a device for transferring money from the impatient to the patient. Fourth, you need to diversify your portfolio but not over-diversify it. Buffett owns a large number of stocks across different sectors and industries, but he also concentrates his investments in his best ideas. He does not spread his money too thin or buy stocks that he does not understand or care about. He says, diversification may preserve wealth, but concentration builds wealth. Fifth, you need to be rational and independent. Buffett does not let his emotions or biases influence his investment decisions. He does not get carried away by fear or greed, nor does he succumb to peer pressure or herd mentality. He thinks for himself and makes his own judgments based on facts and logic. He says, be fearful when others are greedy and greedy when others are fearful. These are some of the main principles that guide Warren Buffett's investment approach. Of course, there is much more to learn from him and his remarkable career, but these are some of the basics that can help you get started. If you enjoyed this video, please give it a thumbs up and subscribe to my channel for more content like this. Also, let me know in the comments below what other topics you would like me to cover in the future. Thank you for watching, and I'll see you next time.